What caused the recent drop in Bitcoin's price and the outflows from ETFs? It's a question that's been perplexing the crypto community lately. Let's take a step back to Wednesday when Bitcoin ETFs experienced unprecedented redemptions, totaling around $563.7 million in net outflows. This marked the highest redemption volume since their launch in January 2024. This significant event occurred amidst a 10.7% drop in Bitcoin's price over the past week. It even plummeted briefly to around $56,800. However, since then, Bitcoin has recovered slightly and is currently trading at around $57,700. Market research firm Farsight Investors recorded the highest redemption volume in Fidelity's BTC ETF, FBTC, which saw net outflows of around $191.1 million. Grayscale's GBTC ETF recorded redemptions totaling $167.4 million, while ARK's ARKB ETF saw $98.1 million redeemed, and BlackRock's IBIT ETF saw redemptions of $36.9 million. This massive redemption from ETFs occurred despite statements from Fed Chair Jerome Powell, who reassured markets that the central bank is not expected to raise interest rates in the near future. Powell also announced a new plan for the Fed's continued purchase of government securities to improve bond market liquidity. However, the sharp decline in Bitcoin's price coincided with weak data from the first Bitcoin and Ethereum ETFs approved for trading in Hong Kong this week. Analysts have noted that this data only exacerbated the downward trend in crypto markets. Data from analytics company CryptoQuant indicates that a significant portion of the Bitcoin price decline stemmed from a slowdown in demand from long-term holders, or hodlers. According to the data, demand from investors who only buy Bitcoin and almost never sell dropped by around 50% in April, from over 200,000 coins at the end of March to just 90,000. CryptoQuant also noted that the decline in Bitcoin demand is reflected in a decrease in daily purchases by ETFs. Daily Bitcoin purchases by ETFs have nearly dropped to zero at the moment, after peaking at over $1 billion in mid-March, the report stated. In light of this data, senior analysts estimate that further price declines are possible. A CryptoQuant analyst defined the lower target range between $55,000 and $57,000, a 10% drop from the current average entry cost for investors, which stands at $63,000. Concerns about further declines were also reinforced by other well-known analysts. For instance, analyst Scott Melker identified $52,000 as the short-term support level. However, Melker noted that a 23% correction is still very mild in a bull market period and is not unusual compared to similar periods in Bitcoin's price cycle. Other analysts sought to calm investor concerns about recent downturns. Nate Gerasi, president of ETF Store, pointed out that significant redemptions have also occurred in the precious metals market recently, with gold ETFs experiencing outflows totaling billions of dollars since the beginning of the year, despite gold prices rising during this period. In summary, Bitcoin's recent price drop and the massive outflows from ETFs have created a stir in the crypto community. However, these events are not unprecedented in the volatile world of cryptocurrencies. Factors such as weak data from newly approved ETFs, decreased demand from long-term holders, and potential further price declines have contributed to this situation. Yet, analysts have reassured investors that these fluctuations are normal in a bull market period. After all, this is what ETFs do.